In this video, I'm going to talk about 5 tips for valuing the project WIP or assessing the project WIP unbilled revenue of an EPC company. Hi, my name is Yash Shah. I'm part of the leadership team at SJA, the first entity to have gotten the license for valuing all the notified asset classes under the Companies Act 2013. Recently, when I was sitting with the CGM of the corporate clients group of one of the largest public sector banks of the country, he asked me, Yash, what is this component called unbilled revenue, project WIP, which is appearing on the books of our borrowers? And also, why does it go on increasing as the stress level in the company increases? Whilst discussing with him, it is then when I decided, why not make a small video on this topic? Do note that in the video, I'll be using project WIP and unbilled revenue interchangeably, but there is a small difference between these two components. So here are the 5 tips. Tip number 1, exercise control over the aging of the unbilled revenue. We need to understand that unbilled revenue is nothing but revenue which has been recognized between 2 billing milestones. In any kind of EPC or construction contract, there are certain milestones when the contractor is allowed to raise his bills. However, works do continue between those milestones as well. And in case your reporting date falls between the 2 milestones, whatever is the quantum of works which have been done, that needs to be recognized. Whatever costs have been incurred into the contract, a corresponding amount of revenue needs to be matched with those costs and recognized as unbilled revenue on the books. However, the important thing to note is that there can only be a reasonable time gap between milestones. It can be 3 months, it can be 4 months, it can be 5 months, it can be 6 months, depending upon the industry and the kind of project that they have undertaken. However, if you see that in your particular case, the unbilled revenue spirals out of control when it comes to aging. It goes into 8 months, 9 months, 12 months, 2 years, 2.5 years, 3 years, 5 years, then you need to understand that this aging needs to be controlled. If the aging is going out of control, then the realistic portion of unbilled revenue needs to be assessed separately. Tip number 2, analyze the implementation schedule of the underlying projects. Every project has an implementation schedule, contractual start, contractual completion, then the order value which has to be executed in that period, and the amount of works done till the reporting date. In case the project is experiencing any kind of delay, then we need to find out whether there is suitable correspondence which has gone from the contractor specifying the reasons and requesting for a suitable extension of time. If there is no extension of time and contractual completion has expired long back and still there is unbilled revenue standing against those projects, then this unbilled revenue requires closer examination. Tip number 3, prepare a billing reconciliation of the project. Now, what is a billing reconciliation? So you have order value, you have the works done, and then you have works billed. This is specifically the difference which gives rise to the unbilled revenue. So works done, works billed, and from there the various recoveries which have taken place against the running bills, which could be mobilization adjusted, security deposit, retention, TDS, WCT, GST TDS, liquidated damages, penalties, all these recoveries need to be reduced to ultimately reach at a component called net receivable. Now the recoveries are many. I can make a separate video discussing about how billing works in the EPC companies who do contract based works. So after reducing all these recoveries, you get the net receivable component, of which a portion is credited to the bank account and the balance amount is receivables along with its aging and retention money along with the terms on whose compliance the retention money will get released. This entire reconciliation will give you a snapshot about the entire project and will be a very useful tool for analyzing the unbilled revenue associated with that project. Tip number 4, you need to review the performance of the project at the site. You can get a lot of data from the various documents and books of accounts. But if your team visits the major project sites with whom the unbilled revenue is associated, you will get a very good insight into the actual physical progress which has taken place, what is the actual amount of works done, which will substantiate the works done figure which is being used in the calculation of unbilled revenue. You will also understand what is the activity level which is there at the site at that point of time, and if there are any delays, what are the steps which the team deployed at the site is taking place to recoup or mitigate the delay, and what exactly are the reasons of delay. So a physical visit to the site is always very helpful when it comes to analyzing the unbilled revenue. Now tip number 5, you need to collate all the objective inputs which you have derived from the above steps into your valuation model to ascertain how much unbilled revenue or project WIP is realistic or realizable. For example, if the unbilled revenue up to a certain aging is there, the portion beyond aging can be subjected to a higher discount factor. That is number 1. Number 2, if the unbilled revenue which is associated with projects which are experiencing delays without any explainable reason or without extension of time, those components can be subjected to a higher discount factor in your valuation model. And similarly, when you prepare the billing reconciliation and you see that there is no steady cash flow coming in from these projects, or the receivables which are there, they are having very high aging, or retention money is standing overdue despite the conditions being met long time back and there are no explainable reasons why the principal or the contractee is not releasing the retention money, then all such projects wherever unbilled revenue is there or project WIP is there needs to be subjected to a higher discount factor while assessing the realization. So I hope you got value and insights from the above discussion. In case you have any queries, please feel free to leave your queries at the comment section and I'll be more than happy to answer them for you, and I'll see you in my next video. Thank you.